Well, good morning. Thank you very much for joining me on this video. I want to talk to you this morning about HST. I want to talk to you about a very specific provision of HST, or Part 9 of the Excise Tax Act of Canada, which governs HST. We've talked about it before. There's a number of things that we can look at with HST, and it's almost infinite in its scope. And we've dealt with them before, and we'll deal with them again. We can look at things like vacant land, for example. It is a subject to HST, and we find out that that's pretty convoluted. It depends who owns the land, how the land was created, how many lots they have, who's buying it, and so on. We can talk about a mixed-use building. It's got part residential and part commercial, and we see that HST is partly applicable, and how we apportion the amount of tax versus the sale price of the property. We can talk about new construction, and I want to tell you that new construction is the one place on your agreement of purchase and sale you should put included in as HST in the purchase price, because it is included in. In fact, you'll get paid on the reduced amount of the sale price on your commission because they subtract out HST, and the buyer signs over his credits that he's going to get back to the builder, and the builder can apply some income tax credits. And then we can talk about zoning versus current use, and we find out that the zoning doesn't dictate whether HST is applicable, but rather the use. You can have a building in a commercial zoning that is not subject to HST. You can have a building in a residential zoning that is. For example, if you have a convenience store and it's in a residential zoning, but it's grandfathered in, it's a non-conforming use, but it's used for commercial purposes, that sale will be subject to HST. You can have a house that happens to be in an industrial zone or in a commercial zone, and yet it's a residence, it's used as a residence, that's what it's used for. It will not attract HST, and on we can go. But I want to talk to you today about specifically the flow-through provisions of the HST. Very important aspect of the Act we need to understand. If you think about a $1 million commercial sale, a $1 million commercial sale generally would attract HST, and that HST would be $130,000, 13% of the sale price. And if you're the buyer and you're arranging financing and you're buying $1 million property, you're really not going to be prepared to cut a check to the government for additional $130,000, and yet specifically that's what you're required to do. But there is provisions called a flow-through. And you in real estate will understand this, because when you involve any expense for your business, you pay HST. When you collect a commission, you're paid HST, and you subtract the one from the other and pay the difference to the government. That's a flow-through. That's an offset of the tax. And you can do the same thing with a commercial sale under certain circumstances. And I want to make sure you understand these circumstances. First of all, the seller should be a registrant. The buyer should be a registrant, and the seller should be collecting HST, and the buyer should anticipate collecting HST. And what the government says is this: look, you owe us, on this example we gave, you owe us $130,000 in tax. And then when you collect HST on the rent or on the business you're operating, you can repay yourself and pocket that HST until you've paid back the whole $130,000, and then you start paying us. So instead of that, we will allow you to treat it as a flow-through, so that you will not pay the $130,000 on closing, but you will remit the tax from $1 that you collect from your customers. And so they allow you to do it as a flow-through, and that's hugely advantageous to your buyer. But you want to make sure that you don't mess it up, that it's applicable. So what happens if the buyer is not a registrant? Well, the flow-through provision would not apply unless he's a registrant. And so you'd say, well, then he should become a registrant. And the simple answer is yes, but not the absolute answer. We had a situation one time that was a hobby farm, and the buyer was buying it as a hobby farm. He was planning on having his daughter, who rode horses, keep her horses in the barn and use the riding arena and so on. It was strictly going to be a residential application. But the owner who was selling it owned it in the name of a corporate farm that he owns, and he was renting out the box stalls and charging HST. So therefore, HST was applicable on the sale. Now, the question came up, the buyer didn't want to pay HST, so they said, why don't you just become a registrant? Well, it's not that simple. If the government feels that you became a registrant solely to use the flow-through provision, but you're not going to be collecting HST, they will come back to you to pay the tax. And remember, it's a consumer tax. It's paid by the end user, not paid by the seller. Now, in that particular case, the seller was the one that created the problem, and so it had to be negotiated somehow in the sale as to how that HST would be paid. But it wasn't a simple matter of being a flow-through. So you have to make sure that the buyer that is or is becoming a registrant will be collecting HST before you can apply the flow-through. Now, and this brings us to my last point I want to talk to you about. This is where it becomes very important in your agreement of purchase and sale. When you're dealing with HST, the question is it in addition to or included in? Be careful here. Sometimes when it's not applicable, and I wish they had not applicable as an option, because 99 times out of 100, we're selling residential resale property, there is no HST, and so we tend to put included in. I'd be way more comfortable if we put not applicable. That's not an option that they give you. But be careful because, as I mentioned earlier, a new home construction, it would be included in, and we would put in addition to in resale with the idea that it's in addition to. In other words, if there is HST, it would be added onto the purchase price, but there isn't one. So, but when you get into commercial, be very careful, discuss it. If necessary, put a condition in the offer that the buyer is allowed so much time to make inquiry and satisfy himself as to the applicability of HST, because it can come back and bite you on closing if nobody thought about it, nobody asked the questions, and suddenly it rears its head. Hope that makes sense. Thank you very much for taking the time. We'll talk to you again very shortly.